This is Justin Pulitzer. This is my midweek video for Wednesday, May 17th, 2023. Interesting week. We just had VIX monthly expiration, and we are going to have May expiration this Friday. So there is the potential for some volatility in the next, I'd say, few days, maybe even after this expiration, as people kind of re-up, if you will. As far as sentiment goes, bit of a pullback, no surprise for those of you who've been following. The market hasn't really gone anywhere, and I guess people who buy premium, they back away. So you've seen a big resurgence here in people who think the market's going to be neutral, because it's kind of been neutral for the last couple of weeks. As far as the CNN gauge goes, very similar situation here, a little bit of a back off, but still a little bit more positive on their end, I guess. A month ago, they were at 65. A week ago, 58. Prior close was 59. So, yeah, a little bit of a back off there. We saw the retail sales not so good, and that took down Home Depot. And what have I been warning you guys about profits and when we'd have to worry? When inflation peaked. And what did Home Depot cite as problematic? Deflation in lumber prices. So we're going to have to see here if pricing power can hold up or not. Prior number was actually revised to be a little bit better. This number was not so great, though. So, almost not quite half, but, we are starting to see things on the margins get a little worse, and we've heard anecdotally that the high end is maybe starting to suffer a little too. So there's always that. As far as the interest rate problem, 2-year back over 4%, well over 4.07, and the 10-year 3.52, almost 3.53. So anything over 3.5, anything over 4, the alternatives start looking more and more attractive. As far as Fed goes, we are still pricing in a September rate cut, but a little bit less than we had seen the prior couple of days. So that's going to bounce around a lot, though, and it's going to be volatile based on economic data. As far as bond volatility, starting to pick up a little bit again. We had picked up. We were in a little bit of a downtrend, and here starting to pick up a little, although still below kind of some key metrics. As far as the actual VIX goes, again, still sort of have this inverted head and shoulders pattern. Still above 1706, which is, of course, a key level, and then, 1634. The last time this happened, we saw a pop-up, a pullback, and then a big expansion in volatility. It doesn't always have to happen the same way, but if we were to just get down the downtrend line, that would take you into the 20s, and that's been kind of resistance for the most part. If we overshot to the backside of the old up channel, it's around 21. So that would be upside risk that I think you could do with sort of without even breaking a sweat. And like I said, today was the OPEX for VIX, so if people are going to up their calls, that could happen in the next couple days. As far as TLT goes, come on, I don't know what. All right, this is very temperamental lately, the platform. So as far as TLT goes, we had talked about getting down to this gap fill, 102.07. We got very close, 102.11. So close enough for government work. If we can get back up over this 102.84, could this be a look below and fail? Absolutely. Where could we come back up to 105s? Probably to the 200 MA. So we'll see. The bad news, though, is that we are transitioning from bullish back into bearish, because we are making lower lows off lower highs. So not so great for TLT longs, and if interest rates are going to start backing up again, that's not good. PE multiple premiums, and there is no alternative and all that. It starts getting more attractive to sideline money, but we did close on the highs, so I guess rates kind of pulled back a little bit into the close. So yeah, there's always that. The nightmare chart, of course, of TNX, it's still, a little problematic. We aren't above, key levels, but we are kind of above some other levels. We're kind of getting closer to the top end of the range. 36.17 to 36.44 has kind of been the key. I'd feel more comfortable with, risk on, if we were back below 34.83, really below the 20 MA. You know me and 20 MAs, long things that are above, or, short things that are below. Just sort of the way I think about things there. As far as banks go, and I'll show you a graphic that was interesting to me. I don't know if I still have it. My computer did some kind of a weird restart before, but I think it was disclosed that this was posted by Savvy Trader. So I just, screenshot it. I thought it would be interesting to use here. Michael Berry and I think David Einhorn seem to be buying the regional banks. So that's interesting. PacWest, Western Alliance was in here. I think even HBAN, that's another one. Wells Fargo, NYCB. These are all interesting buys. So he was pretty bearish, before the market started running, and now he's pretty loaded up. And, percentage of cash is 0. So that could be a little problematic. Michael Berry is an interesting guy, very smart, Big Short fame. I think it was Christian Bale who played him in the movie. But, recently, maybe not as good of a record. It's sort of like Jim Chanos, with Enron. It's kind of hard to hit Game 7, bottom of the 9th Grand Slam, walk-off Grand Slams. It doesn't work like that in reality. You do it once. So we'll see. But Einhorn is in there too. So banks, though, they are not really rallying, and their weakness, I think, has kind of been weighing on the tape broadly. 30.138 is a very key spot for me, and then of course 30.39. We're still below the 20 MA, still below the 50 MA. 100 and 200 MA are up higher. I think that area would be likely resistance if we were to get some kind of a rally. We'll see. We still don't have the banking crisis resolved. We're still worrying about the debt ceiling, and maybe still a hawkish Fed. So do keep that in mind. I'd feel much better about this if we were to get back up over the 20 MA, which is currently 32.49 and falling. KRE. Let's take a quick look at that. Still kind of circling the drain here on trend. It always sort of looks like it's going to start going, and then it pulls back again, also below the 20 MA, which has been the resistance. And even if we did get up to the trend line here at 41.48-ish or so, you'd still have the 50 MA to contend with and a downtrend. So, yeah, down here, would I be short? Probably not, but money flow is starting to pick up a little. So, yeah, this probably does have a little bounce to it, and those prominent investors will probably get some sideline money chasing, but as far as repair, very far from it. JPM, if you want to be long, 50 MA is your stop. 133.38, I'll leave it at that. As far as the Dixie goes, their opinions vary, as they say, but we go by levels and we go by charts, and we are now above the 50 MA. So if you're long, that's your stop, 102.43, very simple. Anything below there could probably check back to the 20 MA at 101.806. If the dollar starts taking off, Facebook and all those stocks that were benefiting from the lower dollar could see pullbacks. I do think Facebook would be a buy, but maybe not before it gets up to 103.448, where it broke down from. So do keep that in mind. Gold, obviously not benefiting from a firming dollar. So we are below the 20 MA. We are below 186.10. No reason to own it below the 20 MA. So if you want to get long and get strong, 186.82, so 186.83 above here, you could be long. Below there, I don't know. We'll see. 50 MA looms large here at 183.85. I think if there's a quick dip, you could try it right or right out for a play, but here's the thing. Are we forming a either head and shoulders or a double top? Your guess is as good as mine, but I do know we're below trend, and I do know below 20 MA. And look what happened the last time we went below the 20 MA. So if you see a gap down on Wednesday, it may be one to go with. Okay, so keep that in mind. Stay frosty, as they say. It just means stay on your toes. Bitcoin. For some reason, whenever I say Bitcoin, I kind of want to I hear it in Matthew McConaughey's voice. Bitcoin, you know. All right. So we're below both the 50 and the 20 MA. We are transitioned from bullish to bearish. We do have a neckline here. We had to look below and fail, but not really percolating. So to 26,520. Below there gets increasingly bearish, maybe for a check back to the 100 MA, which was the key support on 310. So 24,450. It's currently 24,546. So, yeah, kind of close enough for government work. I'd get more bullish on the long side if you got back up over the 20 MA, which is currently 28,028 and falling. As far as oil goes, still not looking so hot. I am expecting there to be a cut production again by the Saudis and OPEC because they're enjoying production. And I was looking at oil production from Russia, who's now selling lots and lots. They went from hundreds of thousands to millions of barrels to India, and they're actually exporting more oil now than before the Ukraine invasion. So yeah, the only people who paid for higher energy prices were American citizens, thanks to the Biden administration. Anyway, 69.39 kind of held. We are well below 20, 50, and 100 MAs. Could we see a bounce here? It's possible. But I would be careful if we start getting below 70.25. That would not be a good thing, as Martha Stewart famously used to say. XLE, these stocks were way overowned, looking pretty crappy and looking like we're retesting 75s. I would love to see an overshoot down here to 72s, which would be channel low, and I think it's a gap fill on the 61.8 around 71.48. That would be a great buy the dip. And the sooner it gets down there, meaning the more, oversold it gets, I think the better the setup is. If we start, popping around, which is actually kind of likely given the last, few price actions. Usually here you get the breakdown, the check back, so maybe we get the breakdown, and then the check back, but yeah, not looking great. Below 20 MA, 50 MA, I'd say 82.79 would be some pretty stiff resistance. I mean, we might even sign 81s as resistance now too, so do keep that in mind. As far as ES, I'm going to pull up SPY. Got a lot to discuss here. It's sort of like one of these push me, pull you type of tapes. I mean, look at this. I mean, before we get over to ES, I'll just show you this quickly, but look at this. Up, kind of down, mini. So this is sort of like down, up, down, but rallied, down, but kind of rallied, up, and then down. We're seeing mixed results here. The diamonds are starting to already break. KRE, IWM, is weak, but the Qs is strong, and SPY is kind of holding strong. So I have an alert over the Tuesday high. If we clear there, I think long back up to 414.65, maybe 415.72, and maybe even all the way back up to 417s. But if we start losing 410s and 411s, you know what I think? Then I'm thinking we're coming down to 407s, 405s, which is now the 50 MA. And then we're kind of in a show me moment, because do we have a head and shoulders here with a double bottom, which is by definition poor low? We had talked about that. We back off before repair. And then if that were to repair, the 2 times range is down at 389.94. The 2.618 is down at 381.39. So was that our summer correction? We'll see. Below 20 MA, still in range though. So we do need to first see it break those 403s. Probably get another bounce there, like a minor bounce, before it would really go down for the count. But, we'll see. The pattern here is not looking amazing, and I'd feel better over the Tuesday high, over the pennant. But we do have many more days we could kind of fill it in, and it just seems to be one of these situations. And if you notice, guess I did SPY already. By the way, we'll just finish up with it since we already did it. Expected move is $5.16. So you know the levels, you know what I'm thinking. Triangle fills. As far as the ES, is this nauseating enough? I mean, we seem to keep stalling at the Fed day high at 41.67, and more importantly, 41.71.75. And I've told you we need to clear this zone, 41.64.5. And to more importantly, 41.71.75 plus for still higher prices. Anything below there risks sideways to lower. We have a new down channel. If tomorrow were a down day, channel would roughly, by the way, come into play at 40.99. Coincidence? We also know 41.05.5 is key, and of course 41.15.25. These were prior supports. We do know we have poor lows from, what was this, Thursday and Monday, Tuesday. Let me see. So this was here, was Tuesday, Monday, Friday, Thursday, Wednesday. So Wednesday and Friday. No, Wednesday and Thursday. Sorry, Thursday. Oh my God. So we had Tuesday, Monday. This is Friday. Thursday and Wednesday, so Wednesday and Friday. Poor lows, I told you, and weak lows, because they're very technically lined up. And if that were to break, we could see a spill, and I don't know that it would stop here. I do actually think, in the end, we would come back down to 40.75.5, 40.73.75, and the Fed day low, which for some reason isn't on here, but it's 40.62-ish. Yeah, 40.62.25. It was the day after, kind of low. The Fed day low is really down here around 40.75, but if we did overshoot, it could be, this was the end of that auction here. So this zone to me would be kind of our downside target if we got a larger liquidation break. I don't know that we will for sure get it, but I do know the levels, and you know, we go from level to level and take it as we can. We know we had a little bit of a look below and fail here at Monday's low, so could we articulate all the way back up to 41.49s and plus? It's also very possible. So on the open, if we do have a rally, we could get up to 41.44. Now, what's been the key? Overnight strength has led to liquidation breaks, to rallies, to pullbacks, and then early weakness has led to pops. So it's sort of like a fade the open. If we're down on the open, it's usually rallies, and if we're up on the open, it usually fades. The NASDAQ, interestingly, was up today, but the breadth was crappy. It's kind of being held up by, you know, the big FANG names. Interim channel highs here would be 13,621-ish to 13,633. The 2.618 of the old Fed day is 13,735.67, so we'll just say half. Very simple. The pullback today held 13,486, so if you want to use that, or 13,477.25, the low of day as a stop, I'm cool with that. Notice where we found support at the 200 MA 15-minute. That's always very bullish when that holds. So as long as it's holding and we're above there, I think you could BTD. But if we get below there, maybe start STR, selling the rips. Where would be other downsides? 13,370.25. The Fed day high, 13,314 to 13,298.75. As long as we're kind of in those areas, it's still sort of okay, but we wouldn't be long anyway. We'd be short because we'd be below the 2 times range. So you now know the levels. Let's talk DIA. By the way, we had mentioned that this was not looking so good. The expected move was 404. This is going to hinge a lot on a couple of big earnings that are coming in the next day or two. We had Home Depot blow up. That's why this kind of cracked. And we are below the 50 MA, but we are still above the reference low at 329.37. So it sort of all isn't lost. And another big down day, guess where we are? We're down to the 200 MA and the breakout and the 50% fib. So could we overshoot to the 61.8? I mean, I guess at 325, what is this? 325.52. But I'm thinking the 200 MA probably would find support. So what's the setup here? Well, it's very simple. Back up over the 50 MA, 331.54 is a long. Anything below there is neutral to short for the move down to the 200 MA at 327.72. Now, if we have an early pop that fails at the 50 MA and then we come back down, it's short with a stop over the 50 MA and press it aggressively below the Tuesday low. I'd be careful if Wednesday opens below the Tuesday low, like we have some kind of a weak open and then get back into range, because then I do think we would float up and retest the 50 MA because it'd be kind of a look below and fail. Okay. The VWAP, by the way, just an FYI, 331.5. So look where that lines up with, right at the 50 MA. So we had an underwater close. So that bolsters my thinking that that could be a right or, first of all, for a scalp trade, it's a right or right out back off play all day long, in my opinion. Not all, I shouldn't say all day long, but what I mean is it's one I would take. It's a likely one I would take on the first test. So that's why I mended it from all day long. We do have a bit of a trend break. And like I said, this is not looking so super hot. We are still within a range context, but we are below trend. We are below the higher low, and we are below the 50 MA. And more importantly, we're below the 20 MA, which has now become resistance. So, very simple. Back up over the 50 MA. If it holds, or should we say hodls, I know it's going to sound nuts, but probably does get back up to the 20 MA at 336s. So, just stay fluid, stay frosty. That seems to be like one of my favorite terms lately. I've been using it quite a ways. Actually going to take a quick look for you at the max pain for DIA. We don't usually do DIA. But I find it could be useful in this instance because this is showing a lot of relative weakness. So for the 19th, it is 334. So that would be back up to this high end of the range here. Back to the 10 MA and where we broke down from. So that does make a little bit of sense. So just be a little bit careful. By the way, in SPY, if we were to look at the max pain number, I'm just going to pull that up for you now. I had meant to pull this up earlier, 17th and 18th. So many down. So 405 is where it is expected to be on the 19th. So that is lower. In between there, though, the 18th, it's expected to be 412. And the 17th, 412. The 16th, 412. So it's only really for Friday that there's some potential weakness. I'm just curious on the calendar what's cooking on Friday. I know Powell is speaking. Williams and Powell, yeah. There's nothing really. I mean, you have jobless claims in Philly Fed. By the way, the Empire State Manufacturing number was a freaking disaster. Huge miss after a pretty decent bounce the last number, but that was the first bounce in since my bar mitzvah. So we'll see. I wouldn't be surprised to see that number change, but as of now, people are in the puts for Friday, so we shall see. Maybe that's debt ceiling fears or whatever. $4.04. Speaking of Home Depot, a very nice little setup here I'm going to show you. I think you'll find this fascinating. So today was technically a look below and fail because we did close above 279.93. So very simple setup. I think the bounce got high enough that if I were long, I'd probably have booked it. But if we lose the low of day of 277, the look below, well, first of all, 279.93. If we lose that, we probably come back to 277.08. And if that's lost, where are we coming down to? 265s to 264s. Okay, so that's short, below the 277.09 low of day. If you're aggressive, you could do below 279.93. Anything above 279.93, and more importantly, between 286.10 is just neutral. I'd say price is accepting lower and is incrementally more bearish, but I wouldn't really find it as a long until you can get over the high of day here. Okay? Bulls do need to get over the high here, and if they do, they probably rally back up to the 50 and 20 MA. Maybe all the way up to the 200 MA. So if you are playing it, maybe buy like 280s, 5s, or 286s and sell, I don't know, 300s. That would be my play, assuming the look below and fail holds. But we'll see. Often when we see these gap downs on earnings, they kind of try to buy it up, and then it ultimately kind of goes lower. So this earnings never really recovered, and now it's sort of like two back-to-back not so great earnings. You may want to do the put ratio or a put spread for the move down here, particularly if you're long shares. Target. This is going to be fascinating because they report, I believe, in the morning, don't they? Yeah, they do. So if this is down big, and it wouldn't surprise me if we got down to 139s, that could be problematic. What would get me interested in Target? A gap and go above the down wedge. We'll see if it would fail or not, but if it gets over 167s and continues, that could be bullish. I do have a little bit of a higher low. I like that it's a little down into the number, but it's not down enough. Let's take a look. The last couple of earnings, where this one was sort of benign, but decidedly down. They did try to bull it back up, but it ultimately went a little lower. The prior one was already had been up, and then it came down, and they tried to rally it again, and it ultimately went lower. It seems to me when these pop on numbers, it gets sold. So, I'm a little careful. To me, this chart looks like it quote unquote should go lower, but it may not. So I am open to, if you are quick over 160.85, which is the high of day here, to me would probably be a long. But, pattern doesn't look amazing as of right now. Walmart, everyone's super long this, in my opinion. And it's down here, obviously, on the Home Depot numbers. They report on the 18th. So I'll tell you what, if they're down on Target, maybe they get a bounce on their own numbers. The 200 MA had been key support. So I'll tell you, if you're long and you want to put on some protection, maybe buy like 50 MA puts and sell, I would say 200 MA, but it's too close. So maybe buy like 147s. I have to see if they are. And then sell 137s, like a $10 wide spread. That would make sense to me. Or if you could get a ratio on cheap or whatever, that would make sense to me. But we're up near some resistance, and yeah, it makes sense that people are booking some profits here in Walmart. Particularly given those crappy numbers from Home Depot and from the consumer sentiment. Something to note here. We have a violation of the 2 times low ahead of earnings in Deere, which is the 19th before market. I'll tell you this, anything below the 2 times lows could continue lower, maybe to fill in this gap back down here to 344. But I am mindful, what would happen, just humor me for a minute, if we got over Tuesday's high? Because this is what quote-unquote shouldn't happen, right? Well, what do you got here? I know, you already know it because you guys are ninja bosses. It's a look below and fail. Look below and fail. So, in Deere, they need to get back, and so get back up over the high of day to make it the look below and fail. And so what would that bring us to? Well, likely back up to 389s, 390s. So, keep in mind, anything below and stays below 365.89 remains a short. Okay? Only back up over gets more bullish. We may see a early check back, and if that fades and we start losing the low of day, I'd press it harder and just use whatever the high of day here is as a stop. But do be careful if we keep plunging into earnings. What I would love to see is this continue down, and then like on earnings plunge, and then use that opportunity to cover shorts or to maybe sell some near dated same week out of the money puts for a potential bounce play. Okay. IWM. But you are seeing these things kind of, let me just take a quick look before we do that with Caterpillar. This is also rolling over. I mean, these were boss stocks, and now they're, I was going to say something, but I'll keep it family friendly for now. We're below 200 MA. I mean, we're below all the key moving averages here. The 20 MA, 50 MA, just not pretty seen here. So I'd get more comfortable, back up over them. But it looks to me like we're finally coming down to fill in this gap at 196.96, and it lines up with the 61.8, so this could be a buy the dip zone. If we were to get down that low, we'll see. It's still to be determined. IWM, pick up the pace here a little. Oh, come on, you. Also, not looking great. I told you, it's got to clear the 20 MA, and now I'm going to be even more of a stickler. 175.30. It's got to get over the 50 MA. So anything below there, I think you could be flat or short. Back up over the 50, or, you know, I'd probably use the 20 maybe as a stop, but over the 50 for long, for sure, in my opinion. $2.98 expected move, of course. That would be upside limitations given the VIX, but if we pop in VIX, it could be, you know, an issue. NASDAQ, be careful for a lower high, for a secure high here. 330.30 is the channel high, and the 2.618 of the old Fed day range. So this would be, and we would fulfill Ra's al Ghul's destiny up here. So yeah, League of Shadows. Maybe we do get up there. The good news is we're pretty well above the 20 MA, and as long as 320.29 holds on dips, it's kind of all good in the hood. And better still if it holds 321.63, because that was kind of the key breakout. So if we did pull back there and that lined up with the 20 MA, it could be a right or right out buy. But as I said, we are narrowing in breadth. Usually that leads to either expansion in breadth or a larger pullback in markets. SMH, nothing to talk about, and you know, bearishly until we get below 123.53, the 20 MA. Are we forming a head and shoulders here, though? We are kind of above the recent highs, so it's not exactly, you know, it's not exactly perfect, but we are over the downtrend line, we are over the 50 MA, we are over the 20 MA, so let's see if we could at least get below those MAs and hold below before we get all bearish on the chips, okay? Very kind of simple setup here. NVIDIA has just been, you know, it's just one of those kind of stocks everyone's AI'd up. AI'd up the wazoo. Do we have a look above and fail potential here? Would I be trimming into 295.47s? Yeah, I would. We got very close to 300. So yeah, I'd be trimming right here, right now. Where would I get bearish? Well, below low of day of 288.32. Below there, oof, look out. So I'm going to put an alert there, 288.32, and I don't think people are expecting that. Doesn't mean it's going to happen, by the way. That would be a right or right out short. Always on guard for a lower high, too. It's been very choppy in range, and I'd probably just be short down to 280, which is the 20 MA, so nothing too dramatic. Maybe an overshoot and a real bear tape down to 50 MA. I shouldn't say a real bear tape, because if we did get a real bear tape, this would be a ton lower. But the 50 MA, you know, if you want to buy 20 MA, first of all, if you're long, I love buying 20 MA, selling 50 MA or below, you know, maybe 62s instead of 68s as a hedge. Are we forming a big head and shoulders here? Could be. We'll see. We have earnings coming up, so I'd be trimming into any pop on earnings and probably a little bit ahead of earnings if long. I know a lot of you are. AMD, so they're now into the AI arena. We're back up to reference resistance here at 102, so I'd be trimming. Don't let it get below 99s on you now, in my humblest of opinions. And if you want to be short below 99s, I'm cool with doing that with like a point stop. Tesla, so Elon Musk, he's cool with losing money to air his mind. I guess when you're that rich, you can kind of say whatever the hell you want. Even if they sue you, you know, it's whatever. I mean, it's pocket change. So you've got, you're above the 20 MA. As long as that holds, I'm cool with being long, but if you were counting on a big pop, you're only up a couple smackers in the after hours, so not exactly the move you were kind of looking for. And to me, this just looks neutral. Maybe it gets down to 144s, maybe it gets up to 200s. Unfortunately, the VIX is very low, but if you kind of have the huevos, rancheros, and margin, I'm cool with selling a strangle. I think this will be choppy in that range for a while. Apple. Obviously above the 20 MA, obviously above the 10 MA. We have resistance just a few points higher, so into pops I like booking profits. If it loses the 20 MA, look out below. So if you're long, by the way, maybe buy 170 and sell like 155 or 150 puts, longer dated. You know, if you're in a long holding, maybe a $20 wide put spread. If you want to be a little bit more conservative, and I'm cool with that, maybe 156, 157 is your lower strike. That was kind of the breakout. And these MAs will catch up probably by the time it gets there. If you want to be, super, cheap, buy 165, which is basically just the gap fill, and sell 155 or 150. I'm cool with either one of those scenarios. You could also sell some upside calls here, 176 to 182. Anything in there I think is cool if you want to help fund those puts, or if you just want to, take in some premium. Amazon quietly creeping higher. They're now learning to use AI in their lingo. There's a couple of problems. So number one, you're right into the down channel. So if you're long, great area to trim profits. This was also key reference resistance here on 2.2, and we are more in a responsive market than an initiative market, right? This was also key breakdown level, meaning we don't usually break out, and if we do, it usually fails. So any more strength I would be selling into. I think the gentleman said he was playing for 122s or 123s. It's possible, but you've got to have a stop, and that stop for me is below 111. Don't be that guy, okay? This breakout here was 110.86. Low of day here is 111.05, so just 111. Don't let it get below there. Anything above there, I'm cool still being long, and if you're long calls, maybe turn it into a spread. Microsoft, the AI gangsta. By the way, they own SwiftKey, and they've built Bing and the ChatGPT a little bit more into there. I like it. It's actually my primary keyboard even before this, and it's good. I was just texting my girlfriend in Russian, actually. So mini look above and fail. I don't even know if this would count, but I do know 317s to 320s is resistance. 20 MA could be some support on a pullback. So if you're long, I'd probably, as a hedge, buy 10 MA, 308, 310, and sell 50 MA at maybe 186 or 286 or 290 as a spread. 20 MA is still we're way above there, so would it be a hard pullback to get there? Not really. I'll just keep it simple for you guys. As long as price is holding above the 10 MA by the close, it's fine. Below there, maybe stop out. Money flow is obviously not confirming new highs here, so any pops, I'd be a Johnny-on-the-spot seller into it. Google getting very close to the JP target, and I told you when this had an 8 handle on it, I was expecting it to get back up to 124s, 125s, and it looks like we're very close to also fulfilling Ra's al Ghul's destiny up here. Members of the League of Shadows. Yeah, 222.43, so 122.43 to 125.49, good trim spot. Will we get the 133s and 140s? Maybe eventually, but I don't know that we're not going to pull back first, so I have some orders peppered out up here to sell into. I would use below 117.44 now as a stop. That's the 50% fib, so as long as we're above there, I'm thinking 61.8. Below 50, I'm thinking gap fill and maybe a retest of 109s, so could get another shot at the goog on a pullback. Meta, not loving the dollar rally, but I told you they now have 2 back-to-back good earnings, and this will be at the top, very top of my list of stocks to buy on pullbacks. Unfortunately, there's very rarely premium to be had in this, so you could use the 10 MA as a stop, I think, now. If you want to use 236.21, that's fine too. 50 MA would obviously be a downside target, so if you want to hedge yourself out, maybe buy 230 and sell 200 if you're longer dated, or buy 230, sell 215. That would kind of get you close to the gap fill in the 50 MA as a hedge. And on the upside, maybe sell some 270, 280 calls if you're longer dated and you're trying to hold it for a while. I don't know if there's a lot of juice up there, though. I'd have to take a look, but Netflix. They seem to be the beneficiary of all the woes of Paramount and Disney and so on and so forth. Got right into resistance, and it's pulling back. They've got a hold 332.72. If you want to give it a little more room, 328.13 is the 20 MA. but I wouldn't give it too much more than that. If you're looking for a right or right out play, if you haven't been long already, 324.72 at the 50 MA, probably just for a quick bounce up to 332.72. Disney. So I've been looking for kind of the higher low. We sort of have it here, but not a very encouraging bullish candle at all. I have an alert over the high of day here, over 92.42, and maybe we get back up to 96s. But if this keeps dumping, it looks to me like we could be coming down to 84s, 85s. And that area, to me, would be very interesting for a buy the dip zone, but we'll see. I have some ratios on and some short puts that I actually just put on. So we'll see. We'll see. Booking. The booking. Still above the 50 MA. It got into my JP sell zone, so I'm sort of not looking back here. I would be an interested buyer close to the 100 MA on a trend pullback, wherever that is at the time. So if it were to do it tomorrow, get rid of the Soval. If it were to do it tomorrow, I mean, it's not, right? But, maybe between 24.88 to 24.80 half. But just looks choppy up here at the moment. Airbnb so far holding those 105s that we were looking for. All right, here we go. So yeah, we filled the gap and sort of bouncing, not all that impressive. Maybe we get back up to 109s, maybe the 20 MA. That would be a good right or right out short, I think, if we got there. But we came down quite a ways. You need to really get over 107.66. I mean, could this keep going lower? It's possible. I think it's just going to depend on the market. If the market firms and we rally, could get back up to the 200 MA, which had been prior support, maybe the 200 MA, 100 MA, maybe even 20 MA. But down here, it just looks like potential secure low, but bulls do need to hold over at least 106.15, which was the Monday low of day. So to be determined. CRM. Also kind of a bullish name. We had this sort of 195s to 193.91s as a key level to hold. You can now move that up, I think, to 200. For me, I would use 201.75, which is the low of day from Tuesday. Anything above there, I guess could conceivably get back up to 210s to 213s. But I would be trimming here a little, given, the kind of squishiness in the tape. Pan W. Everyone loves Palo Alto Networks. And why not? It's been a performer for years. Very simple here. It's got to hold the 20 MA. It did today, and it better continue to do so. So 188.76 and above is okay to be long. Below there, maybe we come all the way back down to 178.97 and maybe even just as little as 184.93. It's a pretty sloppy, choppy trader of a stock. The 200 MA had been the big key resistance. It's really far away here. So, if you're long and you want to try to hold it, I mean, I guess you could buy 190s, sell 170s, or buy 180s, sell 160s if you're longer dated. Those would make some sense to me. I mean, this did pull back and hold where it needed to and rallied back up to the high end of the range. Now you're sort of just mid-range. I'll just keep it simple. 20 MA plus we like, below no bueno. Have a great rest of your week. I will see you for the weekend video, late night Friday, early morning Saturday. Cheers.